Hawk and O, all pun intended, and that's exactly what Dr. Urjit Patel has done for a man who said that RBI is neither a hawk nor a dove but owls instead. He's chosen to be firm, he's chosen to be hawkish, he's decided not to bow down from pressure as far as the rate cut was concerned. He's decided to stand tall, stand firm, has cut growth forecast but has not relented on rates. But let's take this across to a special show and a special discussion. Swaminathan, Aiyar, Dr. Rajiv Kumar is going to be with us in minutes. Keki Mistry and Arvind Subramanian from the Finance Ministry all join us right live here on ET Now. Thanks very much each one of you for being with us. Swami, let's kick off this discussion with you then, a man who very famously said that policy makers in RBI are neither hawks nor doves, have chosen to be a hawk today. No action whatsoever. It was quite a stunner from Urjit Patel, was it not? Did it surprise you?
Well, it's a surprise because there was a wide expectation that with inflation rates coming down a bit and maybe a need to stimulate the economy, that there would be a cut in interest rates. Very, very, very widely expected. On the other hand, you can argue that 25 basis points up or down is frankly not such a big deal either way. There had earlier been a problem that even when the RBI cut the repo rate, it did not get transmitted fully into the banking system. So the question right now is perhaps the conditions are now better for that interest rate cut to be transmitted in any case, even without anything else having to be done. In fact, there were certainly on the secondary market, the yields did go down a bit. So from that point of view, it could be argued that, a transmission with a lag has taken place. If I make a fresh cut, it was only going to have an impact. Sometimes people say with a lag of 1 quarter, 2 quarters, 3 quarters. So perhaps nothing very much is going to happen. But it's interesting that the RBI is definitely saying, let me look at other factors. If the price of oil has gone up, they're saying this has to be factored in as potentially inflationary. They haven't said so, but if the rupee is going to depreciate and import prices of everything will go up, that is also potentially inflationary. They seem to think that the food prices may go up, though I don't see why, after a bumper monsoon. All I can say is that at this particular point of time, they have decided to wait and watch because we have a very seriously disrupted system because of demonetization. That demonetization makes it very difficult to judge what's happening. It would appear on the one hand, there is a huge amount of liquidity with the banks. On the other hand, bank staff are so busy just exchanging notes. Do they have actually time to go out and lend? What is actually happening on that market? In fact, some data that came in October showed negative credit growth in October, even before this disruption, which raises some questions as to what exactly is happening in the economy. So as I said, there is a lot of uncertainty. The RBI is projecting a decline of 0.5% in the GDP rate. Maybe so. I mean, it would be within the bounds of possibility. It could be a little worse. We still have not factored in all the possible consequences of demonetization. To me, the most interesting thing had nothing to do with interest rate cuts, but is saying that there was no question of declaring a special dividend and that there was not going to be a big bonanza through demonetization back to the government on account of a special dividend. That, in terms of the forward speculation and the political impacts, I think was the biggest announcement.
Oh, indeed, and he was emphatic about it. He said it very candidly to a question that I specifically asked him. But Swami, just hold your thoughts there, because I also do have Keki Mistry, somebody who's got his skin in the game as far as this whole interest rate regime is concerned. And Mr. Mistry, are you surprised with no action on interest rates whatsoever?
I would say a little surprised, because my personal view was that 25 basis points cut in rates was something I would have expected. I had even said that it is possible that to give an impetus to economic growth in the long term, RBI, or to improve sentiments, RBI could perhaps even look at a 50 basis points reduction in rates. So in that sense, I'm a little surprised. But if I was to look back a little objectively now and try to analyze why, in my view, RBI is not cut rates, I would say there are probably 3 reasons. Again, in my view, over the next few months, RBI perhaps has room to cut anything from 50 to 75 basis points, 75 being probably on the higher side. Now, if that is the ammunition that is available with RBI, then the question that comes up is, should they take everything front-loaded, take the entire deduction front-loaded, or take it over a period of time when, in their view, it would become more effective? First of all, why do you reduce interest rates? You reduce interest rates for two purposes. The first purpose is to spur consumption, because if you believe that rates are low, more people will borrow money and use that for consumption. Or you believe that it will kickstart economic growth and kickstart the investment cycle, and private sector companies will start investing in creating new facilities. In my view, cutting interest rates at this point of time was certainly not by itself going to be enough to induce more companies to make investments in the current environment, given the fact that capacity utilization in India is still at a level which needs to increase by at least 5 to 6% before we see a spurt in private sector investment. So therefore, cutting the rate at this point of time may not have served the full purpose that RBI had in mind. And maybe they deferred it for a future date. So this is one reason. Second reason, I think, is inflation. So there may be some inflationary pressure building up somewhere in the economy, or some concern they have on OPEC prices or oil prices, where they want to see more data coming over the next few days or few weeks before they take a decision to cut rates. And the third thing, even though I know the governor did say that they did not really consider the Fed rates, my sense is at the back of the mind, you always have the belief that if India is reducing rates at a time when US is increasing rates, then the gap in the rates between the two countries reduces significantly, which in turn could put some pressure on the currency, which in turn could put pressure on inflation, because your imports would become costlier. So I think these are the facts which RBI would have kept in mind, but I think they have the ammunition to look at rate cuts in future.
All right, so those are the potent reasons that you give me why they perhaps did not bite the bullet. But Arvind Subramanian, you represent the view from New Delhi. Are you surprised that the RBI's decision was to pause, because markets had factored in a 25 basis points rate cut there?
I actually think it's absolutely a bold and brilliant call by the Reserve Bank of India and the Monetary Policy Committee to hold rates.
It's a bold call indeed, but Dr. Subramanian, there has been a demand destruction. The RBI has lowered its growth forecast, and I'm going to discuss that next with our panel. Did RBI err too much on the side of caution at this stage? Because the RBI does admit that because of demonetization, growth will be lowered. There is demand that is being destroyed. I mean, given that scenario, shouldn't they have committed perhaps to a lower rate regime?
No, see, there I am absolutely sure, and confident that they made exactly the right call. And remember, exactly because of all the expectation and perhaps even market pressure to lower interest rates, I think this was actually a bold and brilliant call. For 3 or 4 reasons. Let me go through those reasons very carefully with you again. First, we've had a lot of uncertainty from the demonetization, so there is inherent more volatility and uncertainty in markets, and therefore this is a time to stabilize and convey a picture of stability and continuity. Second, you've seen in the last 2-3 weeks after the U.S. elections, bond rates have gone up all over the world, and India has been almost the only country where bond rates have come down. As a result of this, there's been extra pressure, a lot of pressure on the rupee, a lot of volatility, and so in this stage we want to contain that liquidity, and therefore I think that's another reason why this is a good call. Third, we don't know whether for sure how much of the effects are going to be transient and how much are going to be permanent, and monetary policy should not respond to transient changes. Finally, think of the communication dilemma for the RBI. On the one hand, they've had to raise CRR. On the one hand, they've also had to intervene in foreign exchange markets because of volatility. Both of these are contractionary in nature. So they've been doing that. Now, if you say, well, they have to cut rates, then the signaling problem becomes so difficult because you're both contracting and easing, and this is therefore not an easy situation to an easy call to make and an easy call to communicate. And therefore, I think if you wanted clarity of policy and communication, I think this is very consistent with what they have been doing recently. So I think that overall, if you look at all these factors, and remember, in a month or two, we will get to know how much of the liquidity is permanent, how much will flow back, how much of the growth effects are going to be permanent as opposed to temporary, and then they can always take a call on, which way monetary policy should head in the face of new data.
Dr. Kumar, come in on that. On one side, the economy, and everybody believes, does need a demand push, and demand has been hit on account of what the government has tried to undertake. And yet there are these contradictory views on, whether the RBI should be sending out a message on contraction or an expansion of policy. How does one find that fine balance? And do you believe they've been perhaps a little too hawkish at this stage?
No, I think it's not a question of being hawkish. I see it as just taking a very deep, long breath and saying, hold it, boys. We are in the midst of a lot of external global turbulence. We are in the midst of real instability, volatility at home because of demonetization. We don't know yet whether the Rabi crop is going to be better, although we have heard that, the sowing is going, 5% higher. And is the Kharif harvest as good as it was supposed to be? So with all of that sort of uncertainty, turbulence going on, RBI, the MPC has done very well to just take a long breath and say, we'll take a pause and then we'll look at it when you come, whenever the next opportunity arises. So that's my first sort of, and I actually said it yesterday to some of the journalists that I don't think the RBI will cut the rate, and they all, disbelieved me. Now, the second thing that I do want to point out is that, yes, there has been a demand dampening, but from all that I have seen, it's not going to be more than transitory, because it is going to be 1 or 2 quarters, and after that the demand is expected to pick up because the agricultural output, the agricultural performance is going to be good, and I don't see anybody reinforcing what Ambit Capital made this sort of rather, in my view, most scary sort of forecast some couple of weeks ago. Nobody seems to have, believed that. At worst, you want to see a 1% cut in 2 quarters in GDP, and that's going to sort of, be substituted quite quickly with consumption demand. The third point that I do want to make is on this business about the liabilities being extinguished or not, and what the governor said is of course right.
I'm going to come to you,
may
Dr.
not
Kumar.
hold true if the
Dr. Kumar, I have a specific question on that, and I will come to you on the extinguishing of liability in just a bit. But you raise an important point about growth pangs being transitory, and I think that's the point that the RBI policymakers also did make. And Keki Mistry, let me throw that question to you. I think Michael Patra did say that growth pangs on account of demonetization alone is just about 10 to 15 basis points. The rest of it is really on Q2 growth dipping. Do you believe this is going to be as transitory as we are making it out to be, or are we underestimating concerns that could emanate? Mr. Mistry.
In the very short term, there is certainly going to be some impact on growth. RBI has indicated 50 basis points. Now, whether it is 50 basis points or 75 basis points or 100 basis points, we'll have to wait and see. But if this in the long term will lead to greater benefit, because as I said, distribution of wealth has changed to some extent, consumption should pick up. Even if you, for a moment, go by media reports which suggest that some of the black money has got converted into white money, all that money which is now white, will come out of the system once the currency note situation improves, and that, to my mind, will spur consumption. So short term, yes, but I think in the medium to long term, it will be beneficial. Consumption will pick up, in my view.
All right, so short term, yes, growth will be dipped, but medium term consumption will pick up. Arvind Subramanian, you agree with that view that the effect is really transitory? Is North Block as optimistic? Will growth be, will perhaps be closer to your estimates? Or because we've seen a 0.5 percentage point cut in growth forecast from 7.6, it's gone to 7.1 by the RBI.
Yeah, because there are a lot of mixed signals coming, we have to wait assess the data. We still don't have a proper macro read, even the first macro read of what's going on. Once we have those data, we'll analyze them very carefully and come back with a more considered assessment, in the days and weeks ahead. At the moment, it's not very easy to make a really definitive call on the magnitudes of all these impacts.
Swami, you started off by saying that a definitive call is perhaps not possible given there are no exact figures on demonetization and its impact, but the numbers put out by the RBI today in the press conference was 11.5 lakh crore rupees is already back in the system. I'm not going to debate on whether this was an exercise in futility because I'm going to ask Keki Mistry that question. He's been a stakeholder there. I'm really going to ask you on the growth aspect of it. Are both my panelists, Arvind Subramanian and Keki Mistry, being overly cautious and overly optimistic with the impact on growth? Do you share their optimism that this is transitory, 1 or 2 quarters, and things will be back to normal? Or is this going to come back and pinch us all?
I think the disruption is liable to be much, much longer and much more serious than they are expecting, unless something is done to fiscally give a boost. I think the disruptions that you had in the value chain, the disruption in the financing of small industries is very serious and will not be rectified in a very short time. I would expect it to last at least 2 quarters, maybe a little more. But it can be offset by a big fiscal boost if we had a situation where the RBI declared a special dividend and this was then passed on and you gave a boost to demand. So the kind of demand destruction on the one hand could be offset. Now, I don't know at the end of it all the technicalities of what chartered accountants will say, but it seems to me that politically, and at the end of it all, let's be clear, demonetization is a political move. It should be possible in some way, maybe by passing a new law, new legislation, that if something has been extinguished, this can be shown as black money which the government has managed to get its hands on, which can be passed on to people through Jan Dhan accounts. But suppose they choose not to take that route. Suppose, in fact, we find that a very large amount of money has been declared under the voluntary disclosure scheme. Again, we have an enormous sum of money like 2 lakh crores disclosed earlier. Instead of giving complete amnesty to that, they are considering whether the whole thing should be seized. So it seems to me that even through the VDS route, it may be that the government is left with lakhs of crores of rupees, which can be sent back into Jan Dhan accounts to revive demand. So the demand destruction that is currently taking place can be offset by a new fiscal stimulus by transferring these sums. Whether or not it's from a special dividend, it would appear from the sums seized under the VDS or tax got under the VDS. That itself will provide a very large sum of money which can be used for a fiscal stimulus to make up for the demand destruction.
You've touched the very touchy subject of special dividend. I specifically asked that question to Governor Patel there that given the clamor around special dividend, what is his stance going to be? And he was very emphatic. I thought he was most emphatic in the press conference when he said there is no question of a special dividend as of now. There is no question whatsoever. Rajiv Kumar, how do you read that comment? No question whatsoever of a special dividend. Liability cannot be extinguished as of now. Does that money automatically get converted into black money and then gets extinguished? Because there seems to be this also a little bit of a uninformed debate as far as the RBI's own balance sheet is concerned.
Well, I think the operative clause there is as of now, and as of now will change if the government does take any action. See, the technical situation is simply that a legal tender does not get extinguished forever, because that's always there in the system, and the RBI would have to take the view that can come back any time, and it will have to honor that liability if it does come back. So that's technically the correct position, and therefore as of now the governor is correct in saying that there is no special dividend. But suppose there is an ordinance, as was mentioned in some papers this morning, or a law later on which says that all legal tenders of this denomination prior to that date are no longer legal tenders, and the Indian Parliament passes that law, then of course that liability gets extinguished. And that would then enable the government to ask the RBI to pass it on because it would get, its balance sheet would be that much lighter. So that's the route I think could happen, provided of course that there is some amount left in the system which doesn't come back, because 11 lakh crores are already there, and the 15.5 lakh crore is the total amount. But even if you get 1.52 lakh crore like that, that's a good, it's a real fiscal space that the government would have got. But one thing that I don't agree with Swami really is that it may not be a destruction of demand, it might just be a postponement of demand to a very large extent. And in fact, therefore, you might well see a real bump in demand going into Q2, Q4 of this year and Q1 of the next year. And therefore, consumption could pick up very rapidly. And the second thing is that with the formalization, with a much larger formalization of the economy, because the informal economy has been in some sense wrapped up now much more into the formal economy, investment could well see a good pickup. And that's what we could be waiting for, and for the government to really boost its capital expenditure, buoyed by the committee's recommendation on FRBM.
Right. Hang in there, because I think we need to shift the focus on demonetization completely. That was the one big thing that everybody was watching out for the RBI to make a commentary on. Keki Mistry, according to the official figure that the RBI today quoted at the press conference, 11.5 lakh crore is back in the system. They were expecting about 14 lakh crores to come back. If we go with higher estimates, some 2.5, 3 lakh crore be extinguished. Many people believe that number could be substantially lower. Has this been an exercise in futility, you think?
Well, I would look at it a little differently. First, in the first few days of the demonetization, we were getting something like 50,000 crores coming back into the system every day. That number had slowly over a period of time come down to whatever the recent days it's been, whatever 25, 30,000 crores a day. So going by the fact that 11.5 lakh odd crores has come back is not necessarily an indication of the fact that by the time this full exercise is completed, the entire 15 lakh or 15.5 lakh crores will come back into the system. We don't know. I think we'll have to wait and see. Whatever little money does not come back will clearly be a benefit to the exchequer. It will clearly be a fiscal benefit. Whether that amount is 50,000 crores, 1 lakh crores, 25,000 crores, one has no idea. One has to wait and see. But secondly, what it has done is a lot of money which theoretically was lying under the mattress has now come into the open, and therefore that money which has come into the open will spur consumption. And I would say a third thing that benefit that we see is the distribution of wealth or the redistribution of wealth to some extent, where the poorer people have more money now to spend, which will certainly lead to higher consumption.
Arvind Subramanian, you want to add to that? 11.5 lakh crore is already back in the system. The governor said that one of the big purposes it's going to serve is it's going to make the currency note more secure. It's going to give a fillip to digitization. Are those good enough reasons to have undertaken this entire exercise? I mean, I'm sure that wasn't the objective of this mammoth move, one of the biggest monetary moves in independent India. And what if a lot of money does come back to the system?
We're going to be looking at all the data, the high-frequency data, get our first macro read, and then, provide a more considered assessment, in the days and weeks to come.
All right, in the days and weeks to come, we'll of course have to look at the data that's coming in. But Swami, also want to touch upon the fact that RBI did not talk about specific liquidity sucking measures. Yes, incremental CRR has been withdrawn, but one was expecting more commentary on liquidity. Has that left economists like you a little disappointed?
Well, all I can say is that the situation is itself fluid. On the one hand, there is this huge increase in the deposits that they've had. Then the government said, okay, we're going to put it all into CRR. Now they said it's going to be put into market stabilization bonds. What worries me is that, let's not treat this as a normal system. We have a situation where, according to the data that we just got, credit growth actually was negative in October even before this demonetization. So, I'm worried about the longer term trend into which demonetization has played. And now with demonetization, the banks are so busy with the currency exchange that no lending is taking place. So to my mind, normal notions of liquidity and so on, they do not apply in this emergency situation, which is so abnormal that banks aren't able to attend to normal lending. On the NBFC side, there are all kinds of problems in the repayment, willful defaults, or in other cases, there's just a lack of currency. So I think, before taking a view on what's happening in liquidity, we have to wait for this highly abnormal situation to settle down a little and also get a clearer idea of, have the banks lent at all in November? How much have they been lending? I would like to know. The October trend was bad. How much worse is the November trend? So, the concept of liquidity has got very, very seriously altered because of demonetization. We need to get to a somewhat more normal situation before we can take a judgment call on what exactly has happened to liquidity and what its impact is going to be on banking and on the economy.
Fair point indeed, a judgment call on the impact of banking, industry and liquidity. But Rajiv Kumar, there are two questions that I want to ask you. Question number one, given this entire exercise, has the focus shifted away from NPA management? Has the focus shifted away from reducing those toxic assets, giving credit of fillip? Because we're not seeing any of that happen. Banks are really absorbed with exchanging, no longer exchanging, but depositing notes and managing liquidity in that sense. And the second part of that question really has to do with transmission. Banks have not transmitted lower rate cuts when rates have been reduced by the RBI. What gives us the optimism that they're going to oblige this time around?
Great questions, and I think the first one is very important because of the NPAs that you're talking about, and I dare say that the attention has shifted away from that issue, the NPA issue, because of demonetization, and I hope that it will come back to it as soon as possible, because the NPAs are an important constraint in any of the credit offtake, lifting, getting up from the commercial banks. There could well be a play here on the fiscal side, which is that if they do get hold of extra money, it could be used to recapitalize some of the banks, and therefore for them to be able to handle the NPA situation better. I expect the government to take some bold steps actually in handling the NPA situation by means of either new AMCs or mergers and so on, and we might see that from now on until the run up to the budget. On the second issue about the banks being sort of overburdened with all this exchange, etc., etc., I'm afraid the public sector banking sector is overmanned to a fault, and therefore for me to accept that all of them are now busy counting notes and therefore and taking care of all the currency thing, that's probably not true. So the lending operations could take place. The hitch, of course, is that there doesn't seem to be an appetite in the corporate sector for borrowing. And it's not the lending ability, but the borrowing appetite, which is very weak, and which is the cause of the negative credit offtake during October. Now, how would that appetite be rejuvenated is the real issue. And I think this is where my point about greater capital expenditure and outlays by the government would really benefit overall corporate spending. And one point that I had made somewhere in my writings is that I hope this also leads India Inc. to think far more seriously about export demand and not just simply continue to concentrate on domestic market as they have done for the last several decades.
Fair point indeed, but we have a lender amidst us, and Keki Mistry, has lack of liquidity mopping measures by the RBI left you disappointed at the end of this entire exercise?
See, again, in my view, the liquidity which is lying with the banks is not going to, again, my personal view, is not going to remain with banks forever. This is very short-term liquidity. If I had money at home, and all of us would have had some amount of cash at home, all of us would have tried to rush to the banks in the first 1 week or 2 weeks to go and deposit the money. And once the availability of new currency notes in the system improves, most of us will go back to the bank and withdraw that money because we need that cash on a day-to-day basis for some degree of comfort. So whilst digitization, making payments through digital mode, all of that is very, very welcome. I think this improves awareness of digitization. People will still want to have a certain minimum amount of cash with them. So the excess liquidity in the system may not remain for forever.
So a round of last questions to all of you then, and Keki Mistry, let's begin this last round with you. Radical pressure from New Delhi for a radical rate cut, quote unquote, and yet the RBI has chosen to pause. The MPC has decided against cutting rates. Have all of them put together exonerated themselves and asserted their independence, asserted their authority at one level?
Well, I'm sure that the RBI and the policy committee would have looked at a lot more detailed review of the economy and tried to assess whether the benefit of a rate cut would be greater at this point of time, or would that benefit come in much greater if the rate cut was done 1 month or 2 months later, by which time there is more currency in the situation and in the market, and by which time one could expect that could spur consumption. So I think they would have kept all that in mind.
Indeed, the political masters in New Delhi, though Arvind Subramanian, have been talking about a radical rate cut. Do you believe the status quo leaves them disappointed?
See, I think that because it's absolutely the right decision economically, I think that, it should be seen that this is in the best interest of the country at this stage. So I think that's the way to view this action by the Monetary Policy Committee.
All right, the two economists and independent economists on our panel will have to bear the brunt of the most candid and perhaps the most controversial question there. Swami, let's begin with you. Is this the beginning of a flashpoint between the RBI and North Bloc once again? They obviously wanted a larger rate cut, and instead of even giving 25 basis points, Urjit Patel and team have decided to just pause there.
I would say it's frankly too early to say. We are in such disturbed conditions that your guess is as good as mine on what exactly is going to happen. I do not know at this stage how deep the initial disruption is going to be. I have a feeling it's going to be much worse than people are making out. I also have a feeling that there will be a large stimulus, fiscal stimulus given through Jan Dhan accounts or rather. Again, I don't know how big that will be. Again, I don't know to what extent it will. So when there are so many unknowns at this point of time, I would say I would prefer to sit and watch the drama unfolding before I make any bold statements on what's going to happen or what the outcomes are.
All right, you're just going to watch the drama unfold. Rajiv Kumar, are you going to also sit back, watch the drama unfold? Or do you believe that Mint Street at one level has been unnecessarily too conservative?
The first point that I do want to make is that I don't know what evidence was presented on the show, but I didn't have any evidence to say that the North Bloc was sort of breathing down RBI's neck to cut the rates very heavily, etc., etc. The second thing is that this is the beauty of the new mechanism, the MPC, which is that even if the RBI governor did want to oblige, he will not be able to do so because the MPC is the one which takes the decision and not him. So that I think will ensure that RBI's autonomy and RBI's actions in the best interest of the macroeconomic management will henceforth be much better guaranteed than in the past. But lastly, let me say that that I don't think that there will be such a great disruption as Swami tends to believe. What I do feel is that the government will be a big budget, not necessarily through the Jan Dhan accounts, probably because that might fall foul of even the election commission and will be seen as too bluntly populist, but could see a huge outlay, increase in the infrastructure and capital spending by the central government in this budget, because that will then improve productivity and has the possibility of triggering investment demand, which is what we need today, and not a great increase in consumption demand, because that will then raise inflationary expectations and force the RBI to take measures which will then dampen the whole cycle again. So it is investment that needs to be triggered, and it is capital expenditure that needs to be boosted, and which I think will happen in the forthcoming budget.
Indeed, but on that note, completely out of time here on this edition of Hawk in Awe. We've of course discussed and debated the very important status quo by the RBI. Thanks very much Swaminathan, Aiyar, Rajiv Kumar, Keki Mistry and Arvind Subramanian for joining us. Thanks very much indeed, viewers, for tuning in.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.